This week on the podcast, we start your new year off with a bang, going back through some fantastic episodes from 2025. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. Right, Claire, we've had to fire up the heaters in the Profit Cash Growth office, and here we are, between Christmas and New Year, dedicated, yeah? Slam your chest as you say it, dedicated, recording the New Year's Day episode.
We've got no idea what day of the week it is.
You don't know what day of the week it is.
No one
I do.
does.
It's Monday today.
I literally never want to see a single piece of cheese, a mince pie, or a quality street ever again. And it's absolutely freezing because we're out for 2 weeks, so we've shut all the boilers down in the office, and there's no heating at the moment, is there?
Now for us, it's the 29th of December. You said that this day is officially known as what?
Get the fuck out of my house, guy. No, if you're anything like us, you've probably had the last 5 or 6 days, literally chock-a-block with seeing people and eating and drinking. And so you're probably a bit fed up with it now. And we're quite enjoying the peace and quiet and the normality of just a normal day, aren't we?
Well, you're going into the freezing cold Profit Cash Growth office to record a podcast.
Yeah, standard day for us.
Desperately. What was the temperature in here when we walked in?
8 degrees.
8 degrees, yeah. And all the main heating's off, so we're on electric heaters trying to
so if
get
you can
ourselves
hear
nice and warm.
chattering tea, then please just ignore it. We're absolutely fine.
Anyway, we've got a few things to go through today. So the main purpose of today's episode is to do a bit of a review of the year. We're going to look through, as we did last year, the top 3 downloaded episodes by our listeners, just so that you know what everyone else is listening to and what you should go back and listen to. And then I'm going to give you my top 3 favourites, and Claire is going to give you her favourites of the year and all the lessons that we've learned from this year. And there's been some really cracking stuff that we've covered this year. And I also think that it's always interesting to see what the biggest downloaded ones are, because you don't know this either, Claire, but they always surprise us. Do you remember last year when you were so disappointed that it was salary sacrifice secrets?
It's always a tax one. It always is.
Everybody just focuses. No matter how much we try and change people's mindset into focus on making money, they just focus on saving money, don't they?
Yeah.
It just drives us absolutely insane. Anyway, I was reading an interesting article yesterday about, it's linked to business rates. So there's this whole thing going on. The world's exploded with how their business rates have just gone through the roof. You've had it, haven't you, with your office, which is ridiculous.
You're just in a queue. It's really frustrating because I know that the business rates, basically the rate that we've been given for April, is just extortionate. And I know it's wrong. We've got the wrong classification. We're classed as a warehouse, not as a office, and all of these types of things with it. But you're just in a queue and they won't give you any sort of date when they're going to resolve it. And it's really, really frustrating because the expectation is that you just pay it, and you could literally wait years for your review to be looked at. And all that time, you've got to overpay.
I know.
It's absolutely absurd. So we're probably going to have to move office.
Yeah.
So that we're somewhere that's got certainty.
Yeah, exactly. It's insane. And we're hearing it from business owners all over the place. And then you're reading about it in the news, and it's particularly painful for hospitality. But this is probably the biggest one that I've seen. And this is a story all about Winter Wonderland in London, the big Hyde Park event. And there's lots of interesting things that have come out of this around the event itself. But the rateable value of the land used for this year's Winter Wonderland is set to rise by 275% next year.
That's crazy numbers.
So at the moment, the rateable value is £1 million, and it's been re-rated at £3.75 million.
Wow.
Which is absolutely staggering, given the fact that we are very aware that prime central London land at the moment is dropping. We know from the housing market last year, we know that property prices in prime central London, Mayfair, Hyde Park, that sort of area, have literally dropped by about 15% in the last 3 years. It's the worst performing housing market. And obviously, a lot of that's driven by land. So how they can justify a rateable value that's going up in that area just seems
Yeah, but you're talking
insane.
about residential or commercial development land, whereas this is pure prime retail or event space, isn't it? And I think that is slightly different.
Yeah, but why is the value of it gone up? Why is its rentable value gone up?
Well, there's lots of reasons why. So firstly, there is a significant change. I don't want to bore people because this is supposed to be an uplifting Christmas, New Year one. But basically, everybody's, with business rates, you get revalued every 3 years, and that's kicking in from April 2026. So they've got that factored into it, plus the fact that there's been some reliefs and hangover from COVID in particular and other exemptions and things like that apply specifically to the hospitality industry that are coming to an end.
Yeah.
So there's lots of things going into the mix there, which means that those particular businesses are getting hardest hit. The majority of businesses won't see, I think it's capped at either 25 or 50% increase. I'm pretty sure it's a 25% increase. But
wow.
Yeah, so everybody has seen an increase in their business rates from April 2026.
Wow. Well, a few things that I thought were interesting, though, with the turnover of Winter Wonderland, and I thought I'd quiz you on this. So what do you think? They obviously haven't got this year's total revenues through yet, but what do you think last year's total revenue of Winter Wonderland was?
God, I haven't got any comprehension of it.
I know. I didn't either. This is why this was so fascinating when I was...
Maybe like 10 million?
60 million last year.
16 or 60? Yeah.
From tickets, partnerships, pitch fees, and all that kind of stuff. 60 million.
I wasn't sure how much of it was their turnover and how much was actually like ticket sales were like outsourced and actually they're just taking a profit share.
Incredible. So their business rates will be increasing by £721,500 next year.
Wow.
Based on that rate of value. That's their increase. So currently they pay $555,000 and they're going to be paying just over 1.2 million. So the question is, the whole point in the article was how expensive Winter Wonderland is, like £8 for a sausage and that kind of thing. And actually,
it's like that's 5% of their turnover gone.
Yeah. So the summary of the article is that if you think it's expensive now, wait until next year.
Yeah.
Like that type of thing.
But it's sold out every year.
Well,
it's insanely busy, insanely popular. People travel into the country just to go to Winter Wonderland.
And talk about a great acquisition. So the company that runs Winter Wonderland was acquired in 2015. Mm-hmm. What do you think their turnover was in 2015 when they acquired Winter Wonderland? If it was 60 million now?
Maybe 25 million?
27 million.
Yeah.
So they've almost doubled the business in 10 years.
It's all those hot dog prices going up.
So people complain about things being expensive, but twice as many people go there. Well, or the prices have gone up twice as much, we don't know. Anyway, I thought that was really interesting and quite seasonal. And I've got another one for this week's news story of the week.
Is it about the cheese?
No, this was the big headline of the season, which I think is really important for all Santas out there.
Okay. All the Santas.
All of this. True. Yes, it is. So the headline, which really caught my eye for obvious reasons, was Santa suffers a pay freeze, but elves get early Christmas present.
Oh,
and this was
where this is going.
This is the news that pay rates for seasonal Santas have not gone up this year, but elves have seen an increase of 7.6% in their wages.
Well, I guess... I expect that elves are probably on minimum wage or very close to it, but Santa is probably a premium role, isn't it?
It's the senior role. I love it.
That's brilliant.
What do you think that, you are right, they are slightly above, what do you think the median hourly wage is for a Santa?
$14.50?
£15 an hour.
Yeah.
I'm just wondering, do they give us the medium?
I'd struggle to recruit a Santa, wouldn't I, on that wage?
Do you know what the medium wage is for an elf?
£13.
No, it's $12.48.
Oh, okay. I imagine they probably have like younger people being elves as well, though. So like less than under 21-year-olds.
Yeah,
stuff,
talking about that. Typically they're below the age of 21 off.
Whereas Santas are generally jolly old men, aren't they?
Anyway, that's enough about Santa stories and Winter Wonderlands. Let's move on to this week's deep dive.
Can I share my cheese fact?
Yeah.
Because we were talking about this yesterday when I was like, everybody must have a fridge full of cheese right now, like half-eaten cheese from your cheese board on Christmas Day that nobody really wants to eat. And staggeringly, 25% of all cheese in the UK is sold in December. A whopping 275 million kilograms of cheese is sold in December, and a typical month is only 75 million kilos. So yeah, it was just absolutely staggering. I thought, how many households are like us and they've got a fridge full of half-eaten blue manky old cheese or a stinky one that nobody really likes?
You really are the statistician.
I am.
Aren't you?
I love a little Christmas fact.
This podcast is fast turning into the statistician's podcast. Right, can we move on this time to this week's deep dive? Thank you. So, Claire, this week, as I said, we're doing a rewind. Can I get a rewind of 2025? And the main reason we do this every year, I think it's really important, is that I can't stress enough how fast this podcast is growing. And by the end of this year, the amount of listeners that we've got is double what it was at the end of last year. So we know that people are coming into the ecosystem as the year goes on. And therefore, I think often they've missed really good episodes. And also, I think it's a great time on New Year's Day. People are sat there, they're just, bloated, just not got a lot to do. Maybe just want to start to swat up on that day. And most people have got the Friday off, haven't they? Let's be honest, they're not going back to work till the week after. So you've probably got 3 or 4 days where you can dive into a few of these key episodes, which absolutely were game changing. Some of them were really great for me, and some of them were really great for the listeners. So let's do the top 3 countdown for listeners. So these are based on total downloaded numbers for all of the episodes last year, and these were the top 3. Number 1, the most downloaded episode last year. Absolutely nothing. Well, not nothing to do with finance, but unsurprising because it's literally the hottest topic out there at the moment, isn't it? And the episode was 5 ways you hadn't thought to use AI in your business. It was episode number 80, and it was released on the 14th of August. And this is where Claire shared her top 5 AI tips, how you use AI in your day-to-day business life and all those kind of things, wasn't it, Claire?
Not accountancy related at all. It's just more from a business owner's perspective of how we're using it. There was all sorts of things. There's recruitment. We've got a custom CRM kind of thing going on in ChatGPT. We've got some tips of how to use the agent. And it's really interesting because when I saw this, Simon, on your list as number 1, I thought we should do another one because even
things have moved on so quick.
Things have moved on and we are using it in different ways. That is really, really interesting. So yes. I think we're definitely going to do another AI episode, probably early January, I reckon.
Yes, exactly. So second on the list, which is quite topical, I thought it was quite interesting that this was so, and also just interesting from a government perspective about how hot this was. And this was selling to your staff, the rise of the employee ownership trusts, EOTs. This was episode number 78. And we know that this was a hot topic and something that business owners were hugely interested in because of the tax relief on it. But the game is changing, isn't it? As we know now.
Yeah. So previously, if you sold your business to your employees, essentially it was capital gains tax free. So your exit was entirely tax free. That changed at the recent budget, and you now only get 50% relief on it, and the rest is taxed at capital gains tax. So it's still a very tax efficient exit for your business. It has lots of challenges. For some businesses, this is an absolutely phenomenal way to exit. And for other people, this can literally be a complete catastrophe. So depending on how advanced your business is, where you sit, things like that, but definitely check out that episode because selling your business to employees can be really, really tax efficient if it's right for your business.
Yeah. Great. And the final one, the third biggest downloaded episode by listeners last year, which I'm pleased about this one because I wanted to pick this one myself, but because it was in the top 3 for listeners, I couldn't. I really enjoyed this one. This was called KPI Workshop Live, Finding the Metric That Will Explode Your Profitability. It was number 86 and it was released on the 25th of September. And this was fantastic because it was really interactive and it came from
I do quite a
workshop you went to.
I do quite a lot of keynote speaks, keynote speaker sessions, events and things like that. And this is one of the sort of go-to things that we do where we sit in a room with business owners and we help them identify their KPI and then improve that KPI. So it's sort of live walking you through that. I think on the podcast notes, there's also some help sheets that you can download as well.
There's a link to the download the actual KPI worksheet still on the show notes. So if you go there, that's still downloadable. So listen to the episode. Then if you want to take it back into your business at the start of this year and really do a piece and do the workshop yourself, the spreadsheet is there.
Even
there to
better,
do that.
Go to the show notes, download the show notes and print them off. Literally sit with them in front of you. It's really, really one of these ones that you want a pen and paper and play the episode and work through it and pause the episode when you need a bit of thinking time.
That's probably
the best way to do it.
Better suggestion, Claire. Actually, you are right. That is the way to do it.
Thanks. So moving on, Simon's top 3 favourite episodes.
Right, my top 3 favourite ones. So some of this was I had to think about this because, obviously, it's about learnings. So there were some in there that, one of it was not an exciting episode, but one of my big learnings was the one. Do you remember the one where we did interest? I can't remember. I'm not putting.
Wait, hang on a minute. You've got to have your top 3. Stick to your top 3.
Sorry.
What's number 1?
Well, number 1, just because it was fun, was we went inside Amazon's warehouse. Here's what we learned. It was number 88. It was on the 9th of October. That was just one of my favourite episodes.
I loved this
because I love. One of my favourite things to do is to learn from those who've walked the walk that I want to walk, from books, but there's what better way than going under the hood of somebody's business, a world-class business, and seeing what they do, how they do it, and then, talking about those, how we could deploy them in small to medium businesses. And that's what that episode was all about, wasn't it? We really just took it down, tried to break it down, how you could then use their methodologies from Amazon in your own business. I really enjoyed that episode.
I love this. And even to this day, when somebody says to me, what did you learn from doing that Amazon warehouse tours? It staggered me how simple things were. Like in my head, I'd imagined like everything was going to be highly automated, highly robotic, highly controlled, highly systemized. And it wasn't. There was a lot of reliance on people still, but the processes were very easy to follow. And any time that there had been like a hiccup, they'd put a tool in place to mean that a human couldn't make a mistake going forward. But there was still heavy involvement from humans. Yep. And I think that's what I really took away from that, is just stop overcomplicating things. Stop trying to come up with something perfect. Just keep moving forward with these small iterations every time and don't look for perfection.
Yeah.
So, that's a really, really great episode. Just go and listen to it. And if you haven't done so already, book yourself on
a tour as well. Brilliant. Yeah, I'd agree. My second favourite of the year was called Balancing the Scales, Mastering Supply and Demand Challenges. It was episode number 51. This was really early on in the year. It was actually the 23rd of January. So I really think it's a good one to mention, because a lot of people probably won't have had a chance to listen to it. I found this really interesting and really helpful, because I think it's something that there isn't a business out there that doesn't struggle with its peaks and troughs of understanding how to balance those two things between supply and demand, and how to create those operational efficiencies in their business to be able to cope with those peaks and troughs and how those work. And we really broke down what that looks like and what you should be and could be thinking about throughout that. And I found that a really, really useful episode. So my final one, Claire, actually very similar to the supply and demand. Again, the best episodes are always the ones where we're talking about real challenges that everybody faces. Yeah. And this episode was cash flow versus growth, how to tell if you're heading for trouble. It was number 57, again, early on in the year, 6th of March. And again, this is really helpful for those fast growing businesses that are really struggling. They want to grow fast, or they are growing fast, but cash is a problem. And there's lots of nuances about, you shared lots of nuances about how you can manage that sort of balance in your business when you're fast growing. Yeah,
there's like some handy ratios in there of like how much cash we recommend you keep if you're growing and things like that. Just even the ability to identify what is causing your cash flow issue. Is it fundamentally your business model, or is it because you're growing? Because when you're growing, you're always 9 times out of 10 you're going to have an outlay of cash now, but it's going to take a bit of time for that to flow into regular income that's coming in your business. So it's identifying what is the real problem. Is it that you're growing? And if it is that you're growing, then what can we do to help support that growth? If it's not because you're growing and actually you've got a fundamental issue with your cash flow model and the business model that you've gone for, how do we fix that instead?
Yes, and we looked a lot into things like mapping marketing and sales funnels, because they're such early spend, and the conversion could be so far down the line with cash out versus cash in. So we did a lot about that. So it's helpful if you're a high marketing spend business, because you're growing fast and you're putting a lot in at the front end. This is a very helpful episode, definitely. So they're my 3, Claire, for this year. What are your 3?
My 3. Now, these different reasons. For number 1 and number 3, I've chosen because these are questions that pretty much every customer that comes to start with us will mention one of these problems. And I love that we've recorded these episodes, because I can now just ping them off to these customers and say, look, pretty much every question that you've just asked me is covered in this episode. Have a listen to it. So number 1 is CFO or financial controller, which is right for your business. It's episode 76 from the 17th of July. And this is about, a lot of customers come to me and they say basically that they want a CFO or an FD to work in their business. And when we end up having a conversation, we actually identify that they have a bookkeeper that's entering transactions and they have nothing else. And we kind of go through this journey of saying to them, do you know what, actually you need somebody in the middle, like a financial controller, that's going to oversee things. They're going to make sure that your data is really of good quality. They're going to oversee what your bookkeeper's doing, because all your bookkeeper's doing is just logging everything on Xero. There's a huge amount of work to do to get accurate reporting, to get useful information, to get your data in a good place that your CFO or FD can start using it for strategic decisions.
Now, I love it. You've coined a phenomenal analogy, and it's never left me around this, which is you described most business owners as laying the foundations of the house and putting the roof on, but forgetting about building the walls in between it. And this is what this is about. Is I've got my bookkeeper, which is my foundations, and then they try to do the analysis and the smart stuff, but they've not got the walls built, which is the financial controls in their business.
Yeah. So this is that episode number 76 will help you go on that journey and understand, are you ready for an FD or CFO? Because they're bloody expensive. Expect a full-time CFO or FD, a good experienced one, is on a 6-figure salary.
What size business are you when this is the time to listen to this episode? Where are you in your journey as a business owner?
Well, I'd say as a very generalised rule, when you get to about 1 million, you've probably outgrown your bookkeeper, year-end accountant, and that's when you need a financial controller.
Yep.
And if you're a product-based business or a manufacturing business, when you get to 5 million, you you benefit from a full-time FD or CFO.
Yeah.
Otherwise, if you're any other business other than product-based or manufacturing, then probably you get to 10 million, and that's when you need a full-time FD or CFO. If you're not at that full-time FD, CFO, a financial controller is what you need, and that could be fractional.
Okay, perfect. So that's your number one. Number two. Love that you picked this, because I was going to pick this one as well.
I really enjoyed doing this episode.
Can I just say as well that this was actually the 4th most downloaded listener one as well.
Okay.
So it only just didn't make the mark. So listeners love this as well. I know why.
So it's episode 89, Quickfire Finance. Basically, Simon quizzed me on 15 different KPIs, what they mean, how you calculate them, and when to use them. And this episode is really fantastic for just debunking some of the terminology that, from the simple stuff like EBITDA and gross profit that, gets thrown around a lot in the business world, but people might not know what it is or how to calculate it, but also when to use it. There was a lot of ratios in there that actually thrown around like buzzwords, and they're not really that useful for small businesses. They're much more aimed at corporates, for example. Yes. So it's like bringing it back to that. But also, I think this is the first sort of time that we've talked about thinking about, as a business owner, that you've got your internal reporting, what you need to run your business and make decisions on a day-to-day basis. But you've also got what happens when you start to think about getting finance in your business or potentially selling or buying. What you present to the outside world starts to become more important as well. And we talk about the difference between those internal KPIs, which is managing your business, and the external stakeholder KPIs, which will help you get finance, sell your business, buy a business, Absolutely. All those types of things.
Brilliant. Yeah. I totally agree. Love that one, Quickfire Finance.
Yeah, I just really love that because it was a little quiz, and I think I got 15 out of 15.
You do love quizzes, apart from when they're at Christmas. Yeah. And you lose.
I like quizzes that I'm good at. And that was really good for me. I think I got 15 out of 15. So yeah, check out that episode. It's number 89.
With value, because it's a good way to just get so much value out of one short podcast. It was packed with it. So, and finally, Claire, come on.
My number three is the 4 steps to powerful management accounts. And it was episode 64 on the 24th of April. And again, this is like a core staple of kind of what profit cash growth is all about, which I think is why I enjoyed this episode so much. And a lot of business owners will come to us saying, I'm getting management accounts normally from their bookkeeper or from their accountant, or possibly they're even running themselves in zero. And they're like, they just don't make sense. I know these numbers don't add up. I know that this isn't correct. I know that they haven't recorded this. And it's like, okay, it's because you're missing some steps in the process. You can't just get your bookkeeper to log all the transactions and then click on zero and run a report. There's more to it than that. And it's breaking it down into those 4 key steps that will enable you to then go and challenge your current accountant or challenge your current bookkeeper to say, I need you to be doing 1, 2, 3, and 4 and only deliver me management accounts once you've done all of those, please.
Brilliant. Fantastic. And that's a wrap. So, I mean, there's what? I can't add up now. There's 9. There's 9 great episodes to listen to, 3 that everyone else is loving, and 6 that me and Claire absolutely recommend and love.
And what have we got to look forward to in the new year, Simon?
Well, we're going to do some planning episodes, aren't we?
Yeah, we're going to talk you through. We might actually do like a live planning session, because we've got 4 businesses now. So we might pick a couple of them and do like a live planning as to how we set our targets, what targets we are setting, share a little bit of that with you. I think that'd be good.
Brilliant.
We're also going to do some property stuff, aren't we? One of our businesses is a property business, and we know that a lot of our listeners also would be interested in investing in property or do have a property portfolio or a limited company, something like that with property in. So we're going to talk a little bit more about property, because that is a sweet spot for us too. Sure. And we're definitely going to talk more about AI, aren't we?
You definitely want to do another AI one. I think you could do one every 6 months, because the tools and the ideas change.
Move forward a lot.
I mean, to be honest with you, a lot of the ideas now are going to end up dropping into Profit Cash Growth Extra anyway. So, because I've got tons of little tools and tips that I do that just great for Profit Cash Growth Extra each week. But
yeah.
And talking of that, I do have a Profit Cash Growth Extra for this week. So let's find out. So obviously we've been away for a few weeks in December in Tenerife. It gives me lots of chance to read a lot of books. And one standout one, I'm probably going to recommend a few books over the coming weeks because there's a few I read that were great. But one that really stood out was a book called Multipliers by Liz Wiseman. And this is all about being a better leader and really just making sure that you're delivering through people. And it's interesting because I wouldn't recommend reading the whole book, but I would recommend
it's
reading.
Very repetitive.
Yeah, I'd recommend reading the first few chapters to get the gist of understanding what it means to become a multiplier. But I would really focus on, there's a chapter called Accidental Diminishers. And this is a really good chapter because it really lists out the traits of leaders that they would describe as an accidental diminisher. And an accidental diminisher is somebody whose leadership style or behavior or way of doing things actually holds back the potential in their team. And there's an interesting stat in the book about the difference between somebody who's an absolute multiplier, in their words, in leadership versus a diminisher. And a multiplier leader can get 1.76 times the output out of a single person compared to a diminisher, which diminishes them to something like 0.7.
Yeah.
It's like night and day, that if you're a diminishing leader, you actually take your person below one, like, so to speak, below their base level ability.
Performance.
Not
necessarily ability. And I think that's the point,
and that's
isn't
the point.
it?
Their ability's there, but it's like their performance, you're
How
getting
do you get
in the way.
best out of people?
Yeah. And I remember I listened to another guy who recommended this, who launched a very successful business and sold it. And he said this was game changing for him. And he said I read one single line about a trait, and he said it just landed with me. And he said, as a lead, when an email comes into your team and you're copied in, are you the first person to respond? Because if you are, you're an accidental diminisher. And it talks about what's going through the mindset of the person who the email's addressed to when you jump in before them. And it talks through how they're going through their response. They've done quite a lot of work to their response. They've gone to source information to do their response, and by the time they sit to do the response, you've responded on their behalf and you've effectively diminished them. So a really interesting book. So yeah, that's Multipliers by Liz Wiseman. So thanks for joining us for another week's podcast. As always, hope we've got the new year kicking off for you with that one. Do tune in, remember, every Thursday 6 a.m. That's not the time we record it, but 6 a.m. when it's launched every Thursday, we launch a new podcast. If you want to join the newsletter as well, we also write to our thousands of subscribers every Thursday, where you can go to the website and just pop your email in there if you want even more great content dropping into your inbox.
We also have such a high open rate on our newsletter, don't we? Sometimes
Massive.
We're like ticking up to nearly 50%, aren't we?
Which is just massive.
It's always packed full of value. So it's not very long. You can literally read it in sort of 2 or 3 minutes.
Yeah,
so yeah, it's a scanny sort of email. If it's not for you, don't benefit you, delete it. But otherwise, it's normally packed full of value. We're not selling to you. It's not one of these that you need like 5 hours to read through. Just get on the list. You can do that on our website.
And as always, if you feel like you might have outgrown your current accountant, you can speak to Claire and the team at Profit Cash Growth. Go up to the website, profitcashgrowth.com, book a discovery call. You are gagging for some people to talk to in January, aren't you? In fact, you've already got 3 clients that are lined up and many, many, many more discovery calls already booked in. So do be quick, because I think it's going to be a busy year for you.
Hopefully.
Indeed. And we'll see you again next week.